Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week we're covering some traps to watch out for regarding the filing postponement to October 16th. For everything you need in a year-end tax update, be sure to register for Spiedel's 2023-2024 Federal and California Tax Update webinar. We have a list of topics that will be covered and 22 dates to choose from at caltax.com under webinars. For California taxpayers that were granted a storm-related postponement of their filing and payment deadlines, the October 16, 2023 deadline is fast approaching, but there are a few traps that can catch practitioners and their clients by surprise. Most California pass-through entities received the postponement to file their returns, including K-1s, until October 16, 2023. This means many pass-through owners won't receive K-1s until October 16th or later. The FTB and the California Office of Tax Appeals have consistently held that the late receipt of a K-1 is not reasonable cause for a late filing of a return and have refused to grant reasonable cause in these situations. But if the taxpayer can document the efforts they made to obtain the information and can demonstrate why they were unable to reasonably estimate their income from the entity, they may qualify for late payment relief for any related underpayments. Partners, shareholders, and LLC members should begin now to try to obtain information from the entity to timely prepare their return, and they should document these efforts. If they're unable to obtain the required information, they should make their best guess as to the pass-through income they'll receive and use that amount to timely file their own return. If their estimate is off, they can always file an amended return. Like with late K-1s, taxpayers are expected to track whether any payments made via WebPay are actually completed. If a taxpayer schedules a payment that ultimately doesn't go through, for example, if two numbers in the account number are transposed, the taxpayer may not receive notice of the failed payment. However, taxpayers who are not aware that the payment never hit their account will not be granted reasonable cause for late payment penalties. The FTB and the Office of Tax Appeals routinely hold taxpayers accountable for not exercising ordinary business care and prudence by checking whether money was withdrawn from their accounts when it comes to these types of transactions. In 2020, when taxpayers were given until July 15th to make their first and second quarter estimates due to the COVID-19 pandemic, many taxpayers made those payments as one single payment. Unfortunately, the FTB did not grant an automatic waiver to the mandatory e-pay requirement for these taxpayers. Because we're looking at up to 4 estimated tax payments being postponed until October 16th, this will be an issue for even more taxpayers this year. Remember that all payments made by an individual or corporation, regardless of the taxable year or amount, have to be remitted electronically to the FTB after the individual has either made a single estimated tax or extension payment greater than $20,000 or filed an original return with a tax liability greater than $80,000. If the total of the estimated tax payments made with one check or one e-payment is greater than $20,000, your client will be required to make all future payments to the FTB electronically. For clients whose combined estimates will be in excess of $20,000, we recommend splitting these payments into multiple payments below the threshold amount. For an update on recent California tax issues like making the pass-through entity tax election for 2023, transferring a Prop 13 base after Prop 19, conformity issues, and more, sign up for our Critical California Tax Issues webinar on August 24th. Details are available at caltax.com under webinars. That's all for this week. Join us next time for another episode of Spiedel's California Minute.